Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. This video is going to be focused on the SP 500 that is currently approaching a very significant line of resistance right here, a trend line that goes back to the two big highs that we saw in 2022, the all-time high of the bull run and the top of the March 2022 bear market rally. In fact, you can see here just today, we are seeing the market reject off that trend line. That does go to show you that the market likes to respect technicals. This is a trend line we've been looking at for quite some time, and market participants are paying attention to it as investors are booking profits at that level. And that's happening after 18% move up from the June low. Are we about to see the market reverse in a big way, confirming a bear market rally? Now, interestingly, this also comes as the number of news articles mentioning bear market rally is at an all-time high. Now, if you've been following our channel for a while, you'll know that we like to stay away from what most investors are doing. If everyone in the media is talking about a bear market rally, we want to be looking the other way. Now, this is quite an impressive chart, and it also compares it with the number of news articles highlighting new bull market, and you can see a substantial difference here. In 2020, this data seems to be lower than the 2020 spikes, while the number of articles mentioning bear market rally does seem to be a lot more elevated, a lot more concern, and a lot more disbelief around this rally. So that's exactly what we're going to talk about in this video. We're going to go through a few charts that speak a lot, that are very insightful, that in my opinion are incredibly insightful. I hope you guys will appreciate them. Now, without further ado, let's get right into it. Now, let's start off with this chart here of sector ETF fund flows. Now, you can see what we've seen here in 2022. Towards the bottom of this correction here, we've had the 3-month sum as a percentage. We've had ETF fund flows go negative here for the first time since 2018. Now, similar to this chart here, that really highlights the pessimism that we have in the market. Throughout the entire bull run here, we really rarely had outflows from ETFs. The only few times where that did happen were at significant bottoms within the bull run, marking that investors were capitulating at these local bottoms right before major rallies. This is really how the market tends to behave. It tends to bring a maximum amount of pain to a maximum number of investors. It's not going to start rallying until investors have capitulated. And you can see we had the exact same phenomenon at the very bottom of the 2008-2009 global financial crisis, where the market did not bottom until you had outflows from ETFs, where until you had sector ETF fund flows go negative. And so we are seeing that same sign of capitulation today in the market. Although this chart is not entirely up to date, we have rallied significantly since this chart was created, but that does go in favor of the case that this is not a bear market rally, that we still have a lot of pessimism in the market, and that the SP 500 has to climb a wall of worry as all of that money that's been sitting on the sidelines comes back into the market. Now, that of course is just how we see this market right now. There's plenty of very smart people that have the complete opposite opinion to that. And you know, that is just part of being in the market and adjusting your risk tolerance to the data at hand. By the way, if you're so far enjoying this episode, don't forget to click on that like button. It really helps our videos get pushed out. It makes all the effort and the time that we put into making these videos, it makes it worthwhile. So if you're enjoying these presentations, this data that we're putting together, and how we're trying to present it in an educational way, make sure to smash that like button and also subscribe if you are new here and you want to follow these crazy markets with us. Now, just as a visual representation of what the wall of worry really looks like, we can take a look at the economic surprise index here. This is a measure of how economic data is surprising, whether that's to the downside or to the upside. And you can see here, for example, during COVID, you had economic data weaken significantly as you had shutdowns, and so that reading was very low. And then you had that big stimulus, the V-shaped recovery as the economy reopened, and you had a massive spike in economic surprises as economists realized that it wasn't the end of the world and that the economy could actually get through the shutdowns. Now look at what's happening here. We are turning back up from a very low level here. We've had a lot of pessimism. The economic surprise index has been very low because of inflation. Inflation has continuously surprised to the upside, especially over the past few months in April and May. Very hot CPI readings that caused this second part of the leg down in the market. Now we're actually starting to see perhaps signs that that's improving. And so you can see that the economic surprise index is slowly starting to turn up here. And so for me, that really is the representation of the wall of worry. As investors see that it's not the end of the world, they're going to get back into the market and drive it higher. And you can see a lot of major bottoms in the market before big SP 500 bull runs. A lot of them occur with the economic surprise index very, very low, as we've seen throughout 2022. Now, that doesn't change the fact that the market is now testing a very, very important trend line resistance where you are going to see people booking profits here. The market is currently up a staggering 18% off the June low and is also overbought on the daily chart. This is the RSI on the SP 500, and you can see we're currently in an overbought territory. So while you do have this overwhelming bullish case, the market is recovering from very pessimistic levels, or at least that's our opinion, and we do expect things to improve from here, and that's been a core part of our research on the website. So how do we deal with this bullish case that's playing out with the market already 18% off its low at resistance and overbought? And that's really one of the big goals that we have on the website at gameoftrades.net, is to walk you through these trades every step of the way, highlight the targets, the entry levels, highlight the different targets that we have on our favorite sectors, where you can book profits, what the risk reward looks like on different time frames. We post frequent updates highlighting all the key developments that we're looking at and how to navigate the price action, and to also continuously reevaluate the thesis as it's playing out. Should we continue to expect new highs? That's something that we're going to be asking every week and keeping you guys updated on the risk reward in the market and on different trades. And if you go to our trading watch list, you'll find all the different trades, the different sectors that we like or dislike, and all the updates are organized below that trade on the trading watch list. We will be posting a complete overview of the SP 500, the technicals, the internals, the sentiment, reevaluating the thesis, looking at some entries and targets, and we'll be posting that today. So if you're interested in that kind of service, and make sure to go ahead and test out the free trial. We have the free trial for a reason. It's 7 days. You can test out the service without paying anything. See if you find it helpful, and if you do, you can join our growing community of investors and hopefully benefit from the research that we post on there. Now, coming back to what I was highlighting earlier, we briefly touched on the RSI that was overbought. Now, that by itself doesn't really mean anything, but it does tell you that the risk reward has significantly deteriorated for going long on the SP 500, and that makes sense. It's at resistance, it's overbought, and you look at some of the readings that we had throughout 2020 and 2021, the short-term risk reward here was generally poor when you had the RSI on the daily chart at an overbought reading. That was June 2020. It coincided with a small consolidation. Here again in September 2020, right here, bigger consolidation before the market heads higher. Again in April 2021, you got that reading right here, and the market went sideways for a couple of weeks. And then, of course, in November, that was a very poor risk reward to go long on the market. Now, I see a lot of people calling for a pullback right now. Everyone on YouTube and Twitter is talking about that. And so I think it's important to highlight that nothing is a guarantee in the market. The market can stay overbought, overextended for extended periods of time. And we talked about that a few times leading up to the bottom, that this is why we want to buy the dip on the way down and not wait for the market to recover, because by the time that happens, when you are seeing the market recover, it can be very difficult to enter sometimes the market is not going to let you back in. And there are examples where RSI readings stayed overbought with very limited pullbacks for months on end. And you can see that again in 2017, right here, months without a pullback, and yet the RSI was overextended. So I'm not saying that's going to happen, but you have to be aware that that's also a possibility, and we're not trying to time the short-term price action. So in summary, the bull run has legs. We're only just recovering from very, very pessimistic readings. We saw a lot of capitulation towards the bottom. We're seeing a very, very strong rally that usually happens at the beginning of bull runs. But in the short term and in terms of entering the market, that's a more mixed picture. So that's about all I wanted to cover in this episode. I hope you guys enjoyed. If you did, don't forget to smash that like button and subscribe if you haven't already. Now, in the meantime, I wish you good luck on your trading and see you next time.